Les here from BG Trading. Hope you are well. Today is May 3, 2023. The video today is going to be about, is the market going to crash? Okay. Obviously, we're going to analyze high level what's happening with the macroeconomics. We had RBA increasing rates yesterday unexpectedly, and that obviously will lead to more pressure in discretionary spending here in Australia. We might have Fed increasing rates again tonight. We don't know yet, but the market is pricing that's going to happen tonight. So I'm also going to revisit one of chat we had a little while ago about understanding the macroeconomic indicators that leads me to believe that the stock market is weak, is not bullish, although a lot of analysts here in Australia are tipping that the market's bullish. The market could reach the all-time high. I am very skeptical. We're going to have a recession most likely here in US. And if that happens, we most likely going to have a market correction, a deep market correction before that. And I don't think that market correction was last year yet. So remember, a recession comes with sometimes a more than a year delay from the pivot of interest rates. Okay, so let's have a look. I just want to remind you, this isn't a financial advice. It's just us from BG Trading sharing with you how we apply our strategies to know when to buy and when to sell stocks, how we set up target stop losses, how we avoid FOMO, which is one of the most common mistakes by beginners in trading stocks, and much more. So all in this channel. If you like, please subscribe. And I also would like to invite you right now to become a member of our free Facebook community, a buy, grow, and sell strategy for share traders. In this community, post a lot of great quality content, and we have a fantastic conversation with our members about potential buying opportunities, stocks that are trading at what we call technically discounted price, not just for the long term, but also for the short term, and also have some good potential for growth from its fundamental perspective as well, not just from the technical perspective, but also fundamental perspective. So all in this community. So make sure you subscribe. It's free, and I'll be putting the details at the description below. So now, quickly, and let's first of all, let's see what's happening with here in Australia. So yesterday, the RBA, despite inflation has been falling to 7% in March quarter. RBA raising interest rates once again for 11th time, and now to 3.85%, despite last month pause. So a lot of analysts was tipping that the rates will be kept on hold. I was expecting as well the rates to be kept on hold, but we have this very negative surprise for the short term from RBA. But we never know. That probably could be a positive for the long run. In fact, if they control the inflation, we might see rates coming down by early 2024, or who knows? I can't just predict that at this stage, okay? But mostly important, we need to understand what are the deep effects, impact of this in the economy here in Australia, and obviously keep eye on what Fed is doing in the US, and that will have a global effect, okay? Now, as a result of that interest rates interest rates hike yesterday, we had a sort of a bearish formation into the ASX200. Although last week here in this very same community, I have been warning our members about about the chart formation on ASX. As you can see here, 4 days ago, the whole index was looking weak, and therefore, with some of VIP members, obviously we took precautions, and we then started hedging our portfolio last week via some of ETF funds that you can allow you to profit out of a market correction. But essentially what I wanted to say here, last week, like 5 days ago, I posted this sort of I don't like to predict here, but that was what the chart formation was indicating, that we would have sort of the ASX200 going towards 7,000 level again. And now with the interest rates hike again, that sort of confirms my theory. But I was actually expecting that to happen even if RBA wasn't rising the rates yesterday. Okay, that's all about the chart formation, and that's what we look here at BG Trading. We looked for potential reversals, and that's what we found here last week, and then have just been confirming. So obviously you got to be cautious about overexposure to the market within the incoming weeks and potentially maybe the next month, but still there's still sectors that could be profitable. Okay, so now let's understand a little bit, because a lot of analysts don't realize that, but once the interest rates pivot, which we don't know yet if it is now, or maybe there will be another rate rise, who knows? But once the interest rate pivot, generally there is a delay. Sometimes 6 to 12 months or even more in order to for the economy to really sort of slow down and sometimes even crash into recession. And that is the problem here, because nobody really is talking about recession anymore, but I will see a lot more media conversation about recession in incoming weeks as a result of this latest interest rates hike. So that's why it's so important to understand the economic cycles, the indicators that sort of show us whether the economy is weak or not. And that exactly, and obviously understand the sectors. What are the sectors that tends to benefit most out of this particular time in the market? And based on that, we make our entry decisions on. So this is a chart that shows the 4 phases of an economic cycle. And then obviously you need, first of all, if you're going to trade or invest on the stock market, you need to understand where we are exactly in this economic cycle. So there's like 4 phases. The first phase is expansion, then we have a peak, and then we have a contraction, and we have a recovery. At the moment, we're coming off from its peak. That's what I'm looking at this moment. And then normally at the peak stage, financial stocks, energy and material tends to outperform, and that's what we saw last year. We see early this year, we saw a lot of iron ore companies reaching its all-time high or really high levels that we haven't seen for over 10, 15 years. Financial stocks also reaching its peaks. But then now, as you can see here, most of the major iron ore heavyweight companies, BHP, Rio, start sort of coming off from its high and trying new lows. And that shows how we are actually shifting from the peak phase of the economic cycle into a contraction, okay? So when the contraction really takes off, that's when we are in a recession, in technical recession, or if we don't get into technical recession, we go close to technical recession. And that brings us to understand what are the stocks that tend to outperform in that sort of a contraction phase. And as you can see here, and this is a very accurate information. If you look at back in the past economic cycles, you see how that really works. So healthcare companies tend to outperform when economic contraction happens, which is what we are shifting now into. And then consumer staples, utilities. So stocks that sectors that most underperform are the ones that outperform in the previous stage. Then also I would like to just to highlight the retail stocks also tend to underperform into this phase, and not until the recovery phase, which happens after we have established a technical recession. Then that real estate and industrial stocks tend to outperform. What's happening now is that a lot of analysts are, in my opinion, they are too optimistic about the current stock market situation. And for me, I can see some further corrections coming up, not just now, but potential more corrections into going through 2023 as recession headlines will come up and will start affecting consumer spending, and also business earnings, company earnings within going towards the end of financial year and the next financial year, the next half of the financial year, we will see the real impact of the last interest rates. And I think we might have still from now another year, another 12 months to get into a recession, and we will see a lot of mortgage holders coming from fixed rates to variable rates. I am one of them, to be honest. But we can only have a contingency plan to make sure we can obviously survive through that sustainably. But yeah, so a lot of bad things still up to happen within the next 6 to 12 months. So really got to be skeptical about it. So the bottom line of this conversation is every time we able to achieve 20 to 30%, we're gonna lock in, and we're not gonna chase huge gains this year. I think things are very fragile at the moment still, as we've been pointing before in this channel. So chasing reasonably close gains from our strategy threshold, which aims to achieve 20 to 40% in 1 to 3 months. So we try to get 25, 30%, get out, lock in profits, and buy again up in the next dip, which I think is going to happen. I'm not expecting all times high anytime soon in the market. At the end of the day, hope I'm wrong. Hope things turn to be really, really good. But those predictions tend to work if you understand exactly how the economic cycle works and how interest rates hikes and monetary policy affects the overall economy. Okay, so this is my video for today. I'm skeptical about the stock market. We could see still a 20% fall on the overall index, yes, at some stage from its peak. You just gotta be skeptical and make sure you hedge hedge your portfolio in a way that even if the market falls, that's what we do here at BG Trading. We last week we opened a hedge position, and even now if the market falls, we don't care. We offsetting potential losses from other positions, and therefore preserving the overall value of our portfolio. And then once the market's right at the correction is finished, and we see the first signs of reversal of a potential rally again, then we sell these hedge positions and buy the very same stock that we've been buying over and over again at lower prices. That's how we work here at BG Trading. So just be careful, trade with caution, and don't be too optimistic when things are preceding a potential recession. Okay, so have a fantastic day, and I'll see you in the next video. Bye. idea when we designed BG Trading BGS20 strategy was to use only a set number of indicators to make it simple and clear to understand and to be able to apply our KPIs very easily and very effectively. So you don't have to be any Wall Street smart person to be able to apply those strategies. We really hope this course will help you to make better decisions and make successful trades. See you in the course.